Hello and welcome. Moss Adams is pleased that you've joined us for today's session, Decoding Incurred Cost Submissions, a Roadmap to Compliance. And before we begin, I'm going to play our housekeeping video.
Welcome, and thanks for joining. We're pleased to present our continuing professional education webcast series. Before we begin, please keep the following in mind. You can customize how you view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can adjust window size and placement or enter full screen mode using the controls at the top right of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons that relate to a different aspect of our session. You can download a PDF of today's slides from the Slide Deck and Handouts widget. You can ask questions by typing in the Q&A window and clicking Submit. We'll do our best to answer all questions or follow up via email. If you experience technical difficulty, refresh your browser by hitting the F5 key. Today's session offers 1 CPE credit. To receive credit, you must meet the National Association of State Boards of Accountancy requirements. You must attend at least 50 minutes of the session and respond to at least 75% of polling questions. To participate in the polls, please check the button next to your answer within the slide window and click Submit. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget and download your CPE certificate. Don't worry if you can't download your CPE certificate today. We'll email you a copy in 2 weeks. If attending this webcast in a group, you must complete our group CPE attendance sheet, available in our Slide Deck and Handouts widget to receive credit. Please have all group members sign it and send only 1 sheet per group. CPE credit can only be awarded to participants registered as themselves and isn't available for participants who view the on-demand version. This presentation is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
All right, sorry about that. We have 2 speakers with us today from Moss Adams. We have Rich Weber, partner, and Karen Melendez, senior manager. And now I would like to turn the floor over to them to get the presentation started.
Hi, everyone. I'm Rich Weber. I'm a tax partner in our El Segundo office. I work with a lot of government contractors across a lot of different industries with a focus on professional services firms, engineering firms, technology companies, and a lot of defense contractors. Work with a lot of companies on federal contracts compliance, ICE model reporting, FAR compliance, cost accounting standards, and other projects. So happy to be here today, and I'll kick it over to Karen to introduce herself.
Hi, good morning, everyone. Karen Melendez. I'm a senior manager here at Moss Adams. I work primarily with government contractors on the accounting side. So I help them set up their accounting system in a DCA compliant manner, work with their accounting staff to make sure they're trained up on the different requirements, help with ICE models, review of ICE models preparation, cost accounting standards, DCA audit preparation and support. So happy to be here with you today.
Thanks so much, Karen. Looks like my webcam is having some technical difficulties, and ironic because I always poke fun at folks that have those issues, but here we go. Anyway, welcome everyone, and thanks for joining today's session on really a critical topic for government contractors, decoding incurred cost submissions, a roadmap to compliance and success. You know, navigating the complexities of incurred cost submissions can often feel like deciphering a foreign language, yet getting it right is really key to staying compliant, you know, avoiding audit risks and really ensuring your organization's financial health in the world of government contracting. Today we'll break down the ICS process, providing you with the insights and strategies needed to really streamline your submissions, maximize reimbursements potentially, and ultimately position your organization for long-term success. So let's dive in and really decode what it takes to excel in this space. As we kick off the training, I'd like to highlight some of the key learning objectives. So by the end of this session, you should have a solid understanding of the principles and regulations surrounding incurred cost submissions, or ICS as they're often referred to as. This knowledge is really crucial for government contractors to remain compliant and competitive. We're going to walk through kind of a step-by-step guide on preparing, compiling, and submitting an ICS. The goal is to really help you strategize effectively, really ensuring your submissions align with the government standards, while also accurately reflecting your actual costs. We'll focus on audit readiness. Learning how to minimize audit risks is really essential, obviously, given the government's rigorous scrutiny in this area. And then by the end, you'll be better equipped to apply what you've learned in real-world situations, really improving your cost reporting accuracy and ultimately strengthening your organization's financial health. So now we can dive in. So quick background on our practice here at Moss Adams in the government contractor solution space. Really just a brief introduction. The firm itself has been around for 110 plus years. We're one of the largest accounting, consulting, and professional services firms in the country. Got a long history of supporting organizations across various industries. And really what truly sets us apart is our specialization in government contracting, among other specialties. This dedicated group of professionals really focuses on helping clients in sectors like aerospace, defense, and technology to navigate the complexities of federal regulations. So really, whether it's compliance with FAR, DCAA audits, cost accounting standards, our team is really here to guide clients through these challenges. So some of the, just a brief overview of some of the service offerings in this group, indirect rate preparation and analysis, one, the topics we're covering today, but you can see, a wide range of other service offerings that we really utilize to support government contractors. So now we'll flip over to Amy for the first polling question.
All right, thank you, Rich. So the first of 4 polling questions is, what type of government contracts have you worked with? A, fixed price, B, time and materials, C, cost type, or D, one or more of the above? And the polling questions are located right on the slides that we're presenting. So if you can't see it, you may need to hit F5 to refresh your console. And then to respond, please click the button next to the answer you choose, and then make sure to hit submit. All right, most have responded. We'll leave this up another 2 seconds here. And here are the results.
Great.
Okay, I'll chime in here. Looks like Rich's audio dropped. So we're going to talk about what is an incurred cost submission. So incurred cost submission, it's a crucial report that government contractors will submit to the federal government, typically to the Defense Contract Audit Agency, which is DCAA. And this report is going to capture all the actual costs incurred during a specific period for a contractor. So it really serves several important purposes. Number one, it's going to reconcile costs. So it allows contractors to align their actual costs with the estimated costs that they initially proposed on various contracts. Number two, claim reimbursement. Contractors can use the ICS as a tool to seek reimbursements for costs that they've incurred while executing government contracts, specifically if they've billed under the amount of the costs that they've incurred. And compliance, submitting an ICS ensures adherence to the FAR and other relevant regulations. So we're going to dive in a little bit to the different components of the ICS as we advance through the slides. First, we thought it'd be important. Oh, there he is, Rich. You want to jump back in, or?
I'm not sure if my audio is working.
Yes.
Oh, it is? Okay, great. Sorry about the technical issues here. Really, in this section, there's a lot of various kind of parts of the indirect cost rates. The one that we're really going to focus on is the final indirect rates used for adjusting to interim billings to actuals. So, some of the other types here, forward pricing is really used for projections to come up with, during the proposal phase, to come up with an estimate of the indirect and direct cost rates over the contract's period of performance. So that's essentially used for pricing proposals and really, for accurately ensuring cost estimates aligned with future expectations. Then you've got the provisional billing rates, and those are, rates that are set for interim billings throughout the fiscal year. And they're really used to estimate costs that are billed periodically and typically established by agreement with the contracting officer. So those are subject to adjustments and really based on actual incurred costs. The final indirect rates, which is the highlighted focus, and this is the area that we're going to focus on today, and it's used to adjust the interim billings to match actual costs incurred. And these rates are critical for aligning your estimated billings with true costs to make sure you're compliant and really minimizing audit risks. And then negotiated or audit determined final rates. These are final rates that are used to adjust billings, close out contracts, and prepare completion vouchers. So they also play a role in determining any final incentive or award fees. So once these rates are finalized, that's really used to ensure all contract costs are recorded correctly, which is particularly important for contract closeouts. So really by focusing on the final indirect rates today, we're going to dive deeper into how the rates impact your financial reporting and contract performance, compliance, especially when adjusting interim billings to reflect actual costs. And then, so if we get into, just kind of an overview here, and we're looking at, the incurred cost submission and what part of the FAR to focus on, the FAR Part 52-216-7, and this really covers allowable costs and payment. So it mandates that contractors must submit an adequate final indirect cost rate proposal to the contracting officer or the relevant federal agency within 6 months after the end of their fiscal year. So, you often hear that the ICE model reporting is due, June 30th of every year. So that's what that points to. The final proposed rate should really reflect the actual costs incurred for the fiscal period, ensuring that it really aligns with the organization's financial activities. It's really important to note that Section 52-216-7 D2 now specifies that the data items required for an adequate ICS. So while the DCA's ICE model isn't explicitly mandated, the listed data items align closely with the schedules used in the ICE model. Additionally, there's supplemental schedules from the DCAA that are also part of the submission. So really understanding the requirements of 52.216-7 is really crucial to ensure your ICE submissions are both complete and compliant, reducing the risk of delays or rejections during the audit process. And with that, we'll go to our next polling question.
All right, so the second of 4 polling questions. Is your organization required to submit an incurred cost submission? A, yes. B, no. C, unsure. And then as a reminder, if you would like to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions. I think Rich was having some audio issues again. Sorry about that. Again, please click the button next to the answer you choose and then make sure to hit submit. All right, here are the results.
All right. So it looks like got a good mix here. Is your org required to submit an incurred cost submission? Yes, no, about 50-50, and then we're not sure. That often happens in government contracting, wherein there may be a requirement that's out there that a contractor doesn't explicitly know for sure that there is a filing requirement. And I've worked with a lot of contractors that actually just voluntarily submit the ICE submission to the contracting officer, just as a proactive step to kind of review where their costs are at. And so I'm not surprised by this answer. All right, now I think we'll kick it over to you, Karen.
Thanks, Rich. So we're going to go through an overview of what's included in the incurred cost submission, some of the main components. First being indirect costs, indirect cost rates. So those two are very much intertwined. An indirect cost is going to be a cost that is incurred but can't be attributed directly to a contract. So by definition, if something is not a direct cost, then it's an indirect cost. Indirect cost rates, those are going to be how the costs are allocated amongst different contracts. So we'll talk a little bit more about, different types of indirect costs, how to establish the rates as we go a little bit further into the presentation. Direct costs are a big component of the incurred cost submission. Like we said earlier, reconciliation of costs. So, reconciling the costs that have actually been incurred versus what's been billed, and the different types of requirements within the ICE model schedules depending upon contract types. So we'll get into that also a little bit further in detail when we go through the different schedules. There's various different reporting for fixed price versus time and materials versus cost reimbursable. So some of the principles and regulations governing the incurred cost submission, direct costs and indirect costs, that's really sort of the whole point of this exercise. So FAR 31.202, that gives the definition of direct costs. Specifically, they're costs that can be identified to a particular contract or a cost objective, really costs that are incurred directly for the performance of a specific contract. This FAR regulation further clarifies that, any cost that can be incurred to a contract should be incurred to the contract, should be coded to the contract. And similarly, if there is a cost that's treated as indirect for one cost objective, you can't then treat it as direct for another cost objective. So really what the contractor wants to do is they want to establish up front how they're going to define direct costs versus indirect costs in their accounting system, and they want to follow that regularly. FAR 2.101, that defines indirect costs, and those are going to be costs that can't be attributed directly to a contract or a cost objective. So instead, it might be incurred specifically just for the overall running of the business, or it might support multiple cost objectives. And again, these costs that are indirect can't be treated as direct costs. So we're going to go through a step-by-step process for preparing the incurred cost submission. The first, which we did already touch upon, is identifying direct and indirect costs. Like I said, so costs that would be considered direct might be a direct labor, direct subcontract, direct travel, whereas indirect cost would be something similar to, rent or general administrative expenses, things like that. So once you're able to identify direct and indirect costs, then the contractor is going to need to establish their indirect rate structure. Things like, will this be a 2-rate system or a 3-rate system? What are the intermediate cost pools versus the final cost pools? Things like that. So, that's going to usually, all these first 2 steps are going to happen earlier in the process before you even get to the step of preparing the ICE model, but it is an important step because you need to be consistent when you do prepare that ICE model with how you've calculated your provisional rates, things like that. So just to get into a little bit more detail, when you identify direct cost and indirect cost, here's just an example P&L. You could see at the top we have direct expenses, and those are segregated from all the indirect expenses, which you'll see at the bottom. So, examples of direct expenses would be direct labor, direct subcontractor. Indirect expenses, are going to be things that aren't attributed directly to a specific cost objective. And those are going to be things like rent, vacation expense, overhead. And really what the contractor needs to do is segregate all like types of indirect expenses into homogeneous cost pools. So really cost pools of expenses that you're going to be incurring for the same type of purpose. And that's sort of the step of, when you're coming up with your indirect rate structure, these might be particular to different organizations. So one organization might look at certain types of costs as direct, some might look at them as indirect, and just depending upon the makeup of the business, they will also have a variety of potential different indirect cost pools. So the next step would be to establish the indirect rate structure. And you'll see here's an illustration of a company that has 4 indirect cost pools. You can see intermediate cost pools at the top and the final cost pools at the bottom. And this is basically going to show the allocation process, how the costs are allocated from the intermediate pools to the final pools, and then the final pools are what's going to assign all those indirect costs ultimately to a final cost objective. So like I said, indirect cost pools, you want to gather costs that have similar logical cross groupings. So we'll just kind of walk through this slide. At the top, the facilities pool, that's going to pool together all of the facility type costs. And when you're setting up the indirect rate structure, you want to come up with a base, which is going to be the denominator. That's really indicative of what's driving those costs. What's the causal beneficial relationship? So in an example such as facilities, in this example, this contractor has decided that headcount of their various personnel is how they're going to allocate the facilities pool. So that's one we typically will see. And you could see based on the color coding, the overhead facilities allocation gets allocated down to the overhead pool, and the G&A facilities allocation gets allocated down to the G&A pool. The next intermediate cost pool that we're going to look at is fringe, and that's a typical cost pool that we see contractors have, and that's really going to accumulate all the types of fringe benefits that a contractor will incur. So things like payroll taxes, vacation expense, medical benefits, things like that. And really an appropriate base that we see would be labor, since those are all labor driven expenses. Typically you would see, all company labor be your allocation base. And then you could see here, just based on the color coding, how each of those allocations get moved down to the final cost pools, based on those relationships. And then when you get to the final cost pools, overhead is typically a cost pool that we'll see, and that's going to be costs that are incurred really in support of operations or contract activity. So it's going to support the technical revenue driving operations of the business, but really without the ability to pinpoint it to one specific contract. So the most significant costs we'll see within these pools would be indirect labor, such as project management or maybe quality assurance, equipment, technical software, dues, subscriptions, really just expenses that support the overall business activity. And you can see in here that in addition to the cost, just naturally in that pool, it will get a facilities allocation and a fringe allocation. And typically we'll see the base for overhead expenses to be the direct labor, because those are the people driving that type of contract activity. So that's typically a good base to use. And then we get down to the G&A pool. This pool will accumulate all costs that are really associated with the general management of the business. They don't have anything to do with the revenue generating portion. It will be things like human resources or accounting, office supplies, things like that. And in terms of establishing the indirect rate structure, the contractor will also need to determine what's that appropriate base. And there's a few different ones that are acceptable. They can use a total cost input, which is going to be all costs of the business, or a value added base, a direct labor base. So really it's up to the contractor, to establish that indirect rate structure, and that's what they're going to report within the ICE model. So as we go through the list, the step-by-step list for preparing an ICE model, once the contractor's established, their rate structure, they know how to identify direct and indirect costs, and they're doing that consistently, they'll want to gather relevant financial data, complete the schedules in the ICE model, and then review and finalize the submission. So we'll dive a little bit into each of those. So gather relevant financial data. This is really, it's going to vary based on what accounting system the contractor's using, how robust it is. Some accounting systems might have a lot of these reports set up within. If you're using a more manual system, or let's say like a QuickBooks, then you may have some of this information offline, and you'll really just want to gather what's relevant for your organization based on the types of contracts that you have and the information that you have available. But some typical, things that we'll recommend a contractor either provide to us if we're preparing the ICE model, or if we're reviewing it, we'll want to, take a look. The final audited trial balance, that's really a good starting point, along with payroll tax returns, the Form 941s, the quarterly payroll tax returns, project cost reports. So, what costs have been incurred for each specific contract on a direct cost basis. Billing reports, what's been billed, cumulatively versus in the fiscal year that you're doing the ICE model for. Detail of any time and material contracts like labor hours, labor categories, billing rates, subcontractor details, and we'll get into why each of these might be important for the ICE model that's being prepared. But what's also helpful is to see any prior ICE model submissions. That way you can make sure there's some consistency year to year. It's good to see if something was reported as a contract that was closed out in a prior year, that you're not also going to report it this year. So you really just want to make sure that you're consistent. You'll need to pull some cumulative numbers from the prior year ICE model into the current year. So it's always nice to kind of use that as a starting point. And I also like to see any provisional billing rate approval documentation from DCA, because they're, when DCA receives this, they're going to compare it to, your last year's ICE model, what your provisional rates are. And it's good to sort of, know if there's big variances, just to see if there's like a data issue or maybe there's a reason why, and just to kind of have that prepared. So this is, not not an overall comprehensive list, but a good list of things that you'll need when you prepare that ICE model. All right, back to Amy for our next polling question.
All right, thank you, Karen. So the third of 4 polling questions: what type of government contracts does your organization typically engage in? A, cost reimbursement contracts; B, fixed price contracts; C, time and materials contracts; or D, other. And then if you do select other, if you could please specify in the Q&A window so that we can see what that is. And then while you're responding, you do have the option to submit questions for the presenters in the Q&A window. We have quite a bit of content to cover today, so if we don't have time to respond during the webcast, we will do our best to follow up with you afterwards. All right, Karen, here are the results.
Okay, great. Wow, so it's an exact tie between cost reimbursable and fixed price. Yeah, typically, if there's a flexibly priced element in one of your contracts, you will see that FAR clause in there, which will require the ICE model. So, it seems like we have a mix. So maybe, some of this information is new and useful, and that's great. We're going to keep going through the presentation. Okay, so the ICE model, DCAA they have a lot of resources on their website, and one of them is an Excel template of, what's called the Incurred Cost Electronically, or ICE model. And this is an Excel template that provides all of the required schedules that are illustrated in the FAR. It has macros and formulas linked throughout. It's a tool, that contractors can use. There's a setup tab where you can input all the different aspects of your cost accounting setup, your indirect rate structure. So, what your G&A base is, how many overhead pools you have, if fringe is an intermediate or if it's a final rate, things like that. And once that's done, the workbook will customize all the tabs and it will be ready for the contractor to, get started. So, this is a tool that's provided, but it's not mandatory that contractors use this exact model, but we find it useful and recommended for, a few reasons. I just wanted to point out. It promotes standardization. So it promotes consistency with the different submissions that DCA is looking to, that they're typically looking at and receiving. So I find that you get a lot less questions when you actually use their model. And it's also efficient because the formulas are all embedded within the model. So there's things that you have to fill in, but really the model does a lot of the work for you. And then it's easier to spot errors, if things aren't tying out the way that they're supposed to. There's also guidance, instructions. They provide like an example model, and they do provide instructions that can help contractors, accurately fill that out and report their costs. So you do have the flexibility and the freedom to use whatever, model or tools, especially if you have a more robust accounting system that generates a lot of them. But sometimes those are just nice to have as, backup supporting schedules if you do choose to use the model that's embedded in the DCA's website. So now we'll just go through at a high level the different schedules that are included in the ICE model and what really the purpose is. And if you use the DCA's model, a lot of these will auto populate based on what you've put into other schedules. So just to really dive in, give a little bit of detail on each of them. Schedule A, this is going to be just a summary of all of your indirect expense rates. So even though it's the first tab, you don't even have to enter anything in there. Once you complete the other tabs, B through H, that model will populate Schedule A. And it will list, your facilities rate, your fringe rate, overhead, if you have multiple overhead pools, things like that. Schedule B, that's going to be your G&A expenses, which is a final indirect cost pool. So what you'll do is you'll enter your G&A expenses from your expense pool directly into that tab. You'll put in your account number, your account name, the amount. There's also an adjustment column. So if there's any types of expenses within that account that are unallowable, whether it's, excess salary or, some type of expenses that you've identified as unallowable, you'll put that on there so you're only claiming the allowable portion. Also, what will get pulled in here is bid and proposal costs, internal research and development costs, and then any other intermediate allocations will automatically get pulled in here. So you'll see a line for, fringe, facilities, things like that. Schedule C is going to be typically your overhead pools. So if you have more than one, which, if it's a manufacturing entity, they may have a manufacturing overhead account cost pool. They may have a general overhead cost pool or an engineering cost pool. So depending upon how that setup tab is filled out, you may have, more than one Schedule C. And again, that's gonna, you're gonna enter in the different account numbers, account names, expenses, that sort of thing. Schedule D, that's going to be any intermediate pools that you have. So, if you have a facilities pool or a home office, that will go under Schedule D. Schedule in between D and E is a fringe schedule. It doesn't have a letter, but that's going to be, your fringe expenses. And depending upon how you filled up that setup tab, if you have a 2-rate system where all of your fringe for direct and overhead labor go into overhead, then it will allocate accordingly. If you have a 3-rate system where fringe on direct labor goes directly to contracts, then it will, do the calculation accordingly. So really, once you fill in those up to this point is where you're going to put all of your indirect expenses. Schedule E, based on how you've set it up, is going to pull in all of the bases, so the denominators for those rate calculations. And really, that doesn't require any input. That will be automatically, and that schedule will then, reveal your calculations for each of the indirect pools. Schedule G is going to be really just a reconciliation between all the direct expenses that you'll be inputting on Schedule H, which we'll get to in a minute, and this should require no entry. Okay, so Schedule H, this is really the most kind of important schedule in the whole ICE model, I would say. This is where you're going to detail out all of your direct costs. So the way the schedule is set up is there's a section, it's broken out by contract type. So it will have, cost type contracts, fixed price contracts, commercial, time and materials. It will also have bid and proposal and internal research and development. And you're really going to break out all the different components of the direct costs. So direct labor, direct subcontractors, travel. And then from there, based on how your rates have been calculated, the model will then apply fringe, overhead, G&A to each of those contracts, and you'll come up with the total, contract cost for each of the contracts during the year. The information on that schedule for your cost type contracts is going to then flow to Schedule I, and this is going to be the schedule that reconciles for your cost plus contracts all of the costs that you've incurred during the year versus what you've billed the government during the year using those provisional billing rates that were previously approved. Schedule J, this is a schedule that you're going to input and detail all the different subcontractor information. And this schedule is broken out by contract type of the subcontracts that you've issued. So whether you've issued a time and materials or a fixed price subcontract, you're going to include information such as, the subcontractor's name, how much you incurred during the year, what prime contract that relates to, and you'll want to make sure on this schedule that your total cost that you've input ties back to what you've indicated on Schedule H. Just to kind of keep going through these, Schedule K is going to detail out all of the amounts billed on a time and materials contract. So labor hours by labor category, by billing rate, and that will flow back into Schedule I. Schedule L is going to include a reconciliation of your payroll tax returns to all the labor that you're reporting within the ICE model. So there will be some timing differences there, since one of the requirements of a DCA accounting system is accrual-based books. Your ICE model will be prepared on accrual basis, but those payroll tax returns will be on a cash basis. So, that will be a reconciling item. Usually you'll look at your, accrued vacation, your accrued wages at the end of the year. And in addition, there may be some, benefits that are not taxable. So it reduces the wages reported on the 941. So you'll kind of just need to detail out what makes up those differences. Schedule M is really if there's any kind of changes, in the accounting or organization for the year, you'll want to disclose that on Schedule M. Schedule N is going to be where the person certifying the ICE model signs. So you'll want to make sure that's, done before the ICE model is submitted. And Schedule O is going to list out any information if contracts have been completed during the fiscal year. So that's sort of the official way of notifying the government that a contract is completed. All right, now we're on to our last polling question. So I will turn it back over to Amy.
All right, thank you. So the fourth poll is, what is your biggest challenge regarding incurred cost submissions? A, understanding compliance requirements. B, data collection and accuracy. C, timeliness of submissions. D, navigating audits and reviews. Or E, one or more of the above. And then also remember to hit that submit button. We do have quite a few options here, so you may need to scroll down to see that submit button. All right, it looks like most have responded. We will leave this up another 5 seconds or so. And here are the results.
Thanks so much, Amy. It looks like we've got kind of a mixed bag here as to the biggest challenge regarding the ICS. Not surprising. So next we're going to kind of move on to really strategies for compliance. Compliance is a big word, that you hear often in government contracting, and really for the ICE model, the key thing is it's essential to really have a solid grasp of the indirect cost calculations and really maintain comprehensive documentation. The government is all about documentation. So the best way to kind of ensure compliance, or at least move in that direction, would be in regular internal reviews, ideally on a quarterly or maybe even a monthly basis, to catch discrepancies before your final submission. So to really review the cost roll-ups and review the cost pools on a regular basis. The key criteria for cost allowability on government contracts are outlined in FAR 31.201-2. And according to this regulation, contractors are really responsible for maintaining detailed records that prove costs have been incurred, are allocable to the contract, and comply with applicable cost principles. So when you're preparing your ICE model, it's really crucial to leverage the DCAA's ICS adequacy checklist, which is readily available online. It's not a secret. This checklist really helps you confirm that your submission meets the required standards before submission. So we can kind of briefly touch on a few areas that DCAA will scrutinize for adequacy. I know we've dug in pretty deep on some of these different schedules, but I'll just kind of talk about a couple of different areas pertaining to adequacy. So on Schedule A, you really want to ensure that all claimed pools, bases, and rates are clearly identified, including the cost of money if applicable. So you'd want to cross-check that total pool amounts align with Schedules B and C, and that the base amounts match those on Schedule E. On Schedule B and C themselves, you're going to want to confirm that G&A and overhead pool costs align with Schedule H, and provide explanatory notes for any adjustments or omissions. Then on Schedule E, you'd want to verify that each base is explained in detail and that cost elements align with reference schedules, particularly on Schedule H. And then finally on Schedule H, you're going to want to make sure that all the flexibly priced contracts and subcontracts are listed by contract type, and that subcontract costs tie to Schedule J. So you can kind of see the pattern here wherein the entire ICE model ties, it cross-references itself. So you want to ensure that everything ticks and ties and that it all makes sense. We'd also recommend submitting your ICE electronically and setting up red receipts to confirm receipt. It seems like something basic, but you always want to have evidence that it was submitted timely. And then really the question is, why is all this compliance so critical? If your submission is late by more than 6 months after the fiscal year end and no extension's been granted, DCAA may provide the contracting officer with unilateral rate recommendations, which would not be an ideal outcome for the contractor. That could be used, based on a decrement factor applied to your historical data, or in high risk cases, a broader company-wide decrement factor. That can obviously significantly impact your contract billings and profitability. So timely compliance really is key. So audit preparedness, government contract audits are, can be on the surface a scary matter to deal with, but really just having an understanding of what they're looking at, what the triggers are and such, can kind of alleviate some of the stress pertaining to government contract audits, particularly ICE model reviews. Some of the audit triggers that we see are like inconsistent indirect cost rates that really raise questions about compliance with the FAR, discrepancies between billing and contract terms. This could be something as simple as billing for unapproved costs or failing to properly allocate costs. Late ICE submissions, that can be a trigger. That's probably one of the more common ones. And then finally, kind of deviations from benchmarks or prior performance metrics might signal issues to auditors. I would say additionally, as an aside, that cybersecurity compliance gaps are increasingly becoming audit triggers, and could potentially become more of an issue under CMMC. Next on documentation practices, which is really foundational to audit preparedness. The government loves to see documentation. And so if the contractor does nothing else, document, your methodology behind your ICE submission. So if, maintaining robust, organized, and accessible records, you want your documentation to really be audit ready at all times. One example would be timesheets should really align with project work descriptions, and all supporting documentation for cost should clearly demonstrate allowability and allocability under the FAR. Another point is really ensuring that direct versus indirect cost calculations are accurate. Misallocations are a frequent audit finding, and they're preventable with good documentation. And really preemptive preparation is critical. And that just means having detailed records that back up everything in your ICE submission and proposals before auditors kind of come knocking. So then we kind of go into responding to audit findings. Really the first step is to acknowledge the findings promptly. Delays or defensive responses can really complicate the process. You want to craft a thorough response, addressing each finding individually, providing additional documentation or clarification where necessary, and outlining corrective actions. Speaking of corrective actions, that might include adjusting internal policies or retraining staff or upgrading accounting systems to ensure long-term compliance. And then obviously don't hesitate to consult with your legal counsel or other financial experts to help navigate findings. And really a strategic response can prevent contract issues or adverse performance impacts. So really the key takeaway is understanding common audit triggers, prioritizing strong documentation practices, and having a strategic plan for responding to findings really greatly reduces the audit risks and enhances your compliance and government contracting. And by staying proactive, which is really the name of the game with all of this, you'll not only address potential issues, but also build trust with your contracting officers, which is really key. So. It's like I kind of went through that already. As far as resources go, a lot of this, what we've gone over, is publicly available online. So, the ICE, like we talked about, the ICE incurred cost electronically model, that's really the go-to tool for preparing the incurred cost proposals and submissions. And it really helps standardize everything, reducing the risk of errors and ensuring all the necessary data is included. You can download the latest version directly from the web link that's listed there. The ICE adequacy checklist we referred to, it's really designed to ensure your submissions are complete and compliant before they're sent to DCAA. So it's all right there in the checklist. It really, using the checklist helps you avoid potential delays and any rework. And it's also right there on the web link. So, and really utilizing the publicly available resources can help you streamline your submission process, minimize audit risks, ensure compliance with the regulations. And I would highly recommend using these tools. So I think we've got about 4 or 5 minutes to tee up some of the Q&A, if that's okay. And maybe I will kick it over to Karen to tee up one of the first ones. I see kind of a list here. If you're ready, Karen.
Yeah, sure. I have one question. What does adequacy mean with respect to an incurred cost submission? So Rich touched on this a little bit when he was referring to the DCA's adequacy checklist. So what'll happen when you submit your ICE model, you'll typically get an acknowledgement from DCA that it was received, and it will be reviewed for adequacy. And when they review it for adequacy, they're really doing their internal checks to make sure, like we said earlier, everything like ticks and ties between schedules. If you said a contract was completed the prior year, but it's included on this year's, they'll ask question, or hey, Schedule H total doesn't tie to Schedule B, or this base doesn't tie to Schedule E. And it's really them kind of just doing like a high level sense check that the mechanics within the model are adequate. Whether or not they then select the model for audit, that will be, the next step. But typically the next follow-up you'll get is, we've reviewed the model and we've determined it's adequate. And that's sort of your, kind of sign that they've accepted the model at this point. And then if they, waive the audit, a lot of times their resources are pretty constrained. So I've seen with a lot of our smaller business clients, they'll just issue final rates and will, forego an audit. But basically you want to, make sure that submission is adequate. Let's see.
Looks like we've got another one here. What should we do if our accounting system doesn't automatically generate the data needed for the ICS? Really, if the accounting system does not generate the necessary data for the ICS, you really need to manually compile the required reports from your accounting records. So often, the accounting system itself isn't going to just spit out the exact information that's required to go into the ICE model. So you've got to manually generate, detailed trial balances, subcontractor invoices, and labor reports. And you just want to ensure that you've got a process in place to collect and categorize the relevant data consistently. And if needed, consider working with an outside firm to help adjust your system for ICS compatibility. Looks like we've got what documentation is required to substantiate indirect costs such as G&A and overhead. And really for G&A and overhead, you need to provide documentation that supports the expenses, such as the GL, financial statements, payroll records, and detailed breakdowns of all the costs included in the pools. You should also provide supporting documentation for the allocation methods used. For example, direct labor hours, cost input, and regular audits of your cost accounting system can really ensure that that these are accurately maintained.
I can take the next one.
Sure.
Are there certain costs that could be direct with government approval? So a good example would be internal fringe benefits such as tuition for contracts overseas that can be billed. A lot of times with government contract, the answer is going to be it depends. And on this one, I would say it depends. Two things. CAS 402 states that you can't treat one cost as direct if in other instances it's indirect. So, if you're charging tuition direct for one example, for one contract, but other similar trainings or tuitions are being charged as indirect to other contracts, you're kind of double dipping because that contract that has the direct cost will also get an indirect allocation. So it's really best practice to, come up with a policy where you're treating all of those costs similarly. Where it may be able to be treated direct if it's a specific training that is, not going to be used for any other contract, then you might, have a case. But that's something you would need to look at what your other types of activity are.
I think that kind of brings us to the conclusion of the presentation, and I'd like to thank everybody for joining us today and listening. And we learned a point or two on the topic. And here on this slide contains our contact information, and the scan here takes you to a web page describing some more of our service offerings and such. But feel free to take down that information, and hope everybody has a wonderful rest of your day. Thank you so much.
Thank you.
All right. Well, thank you, Rich and Karen, for a great presentation today. And then, Rich, thank you for staying with us during your technical glitches. We do appreciate that. And to our audience, if you do have further questions or comments, you can definitely drop a note now in the Q&A window or reach out to the presenters directly. As Rich mentioned, their contact information is in the slide deck, but it's also in your console as well. And if you met all CPE requirements, your certificate is available to download now in the CPE progress window. A copy will be emailed within 2 weeks as well. And then finally, here's a link to a survey for today's presentation. Your feedback is always appreciated. And again, thank you for joining us. Take care, everyone.